Hey, good morning. This is Mayor Valensky with Driving Markets. I hope you're all well. This is driving while talking about markets. Anything said in this media piece is for media publication only. It's not advice, not financial advice. And anything you make on your account is great. Anything you lose on your account, commiserations. It's your losses, your profits, etc., etc. Let's kick off. What I'm trying to do is broaden the audience of driving markets, broaden the audience on my YouTube channel, on my Instagram channel, on Twitter account. You can follow me and get up to date where we're at on all types of views, whether they're market views or political views, etc., etc. Let's kick off. So the big news has to be continuation from yesterday. What is happening to the cryptocurrencies? Hopefully you can hear me properly. Let's check my microphone. Let's change that there. 1 second. Just change it around there. Okay, sorry about that. Okay, so what's happening on, I'm stationary by the way, so it's okay. What's happening on the crypto market? So the crypto market kicked off yesterday with Binance buying out FTX, causing a massive, or putting alerts on massive liquidity issues within the cryptocurrencies. Remember, cryptocurrencies have shot up since 2010, 2012, where earlier this year, Bitcoin reached around about the 68,000 level. Then I put a sell notice out. I said, sell Bitcoin. It's gone all the way down to around about the 20 to 19,000. Then I said, just keep on selling. It's going down to 15,000. Yesterday it touched 15,400, 15,500. It's bounced a little bit today. It's not really happening at the moment and likely to go down to 10,000 in the near future. When there is liquidity issue, whether it's in assets like cryptocurrencies or in shares or a particular share, then what you need to do is get rid of that asset. And at the moment, my opinion is to get advice, is an opinion to get rid of the cryptocurrencies. They're going to go down because there is a massive liquidity crisis going on presently in the crypto asset arena. So anyone who's thinking of going long, you could go long for long term, and it could turn around. On the other hand, it could float all the way down. I'm talking about Bitcoin, the Ethereums, the Litecoins could float all the way down to 10,000, Ethereum down to 500. And then you'll be kicking yourself saying, why did you get in this level? Conversely, if you don't get in this level and you have FOMO, fear of missing out, and then you got in at 21,500 when I was saying, get rid of Bitcoin, get rid of the cryptos, then you'd be also kicking yourself thinking, why am I in at such a high level? So it's very much a gambling market. It's very much a trading gamblers, people who suffer from extreme fear of missing out syndrome, which is the modern day psychosis. It's a modern day sickness amongst all the youngsters. They're afraid they're going to miss the boat, or they're missing something where there's action. Well, the Bitcoin action is going south. Equity markets yesterday dumped. The Dow was down to 32,500, dropped more than 500 points. And it's likely to go down further. Remember, today you've got consumer price index. Consumer price index is the measure of inflation in the States. Well, consumer price index generally is a measure of inflation, but we've got the CPI out in the States today, expecting 8.1. I think it's going to come in 8.3. If it comes in anything higher than 8.1, then the markets are going to go down. Interestingly, politically, you've got the midterms in the US, and the Democrats have come much stronger than expected. It was supposed to be a complete red wave across America, both in the Senate and in the House, and it looks like the Democrats have actually done a very good job at either maintaining control or very close to maintaining control. I'm surprised considering they've just done the most horrendous job in the economy and practically destroyed the US economy over the last 2 years. Joe Biden's not there, Kamala Harris is not there. It's very liberal, very progressive. It's very anything goes, anyone can cross over the border. There's no limitations, no restrictions. I'm not saying being extreme, but on the other hand, the Democrats have been infiltrated with a very liberal socialist movement, and it's looking to change America completely. I'm not for it. I'm more of a disciplinarian, more conservative. So that's my political view on driving markets as far as this channel is particularly concerned. And no doubt I will get some positive and negative feedback on comments. Whenever you mention something politically, you're going to arouse the emotions of the viewer. So the markets have topped out, equity markets have topped out at this level. Can expect them to go down much further from here. Even if the CPI comes in lower than expected, you can still expect markets to go south. It's the end of the earnings season. There's nothing there to push markets up. Facebook, Meta, which is one viewer said, I've got it in for Meta or Facebook. Well, I actually do have it in for Meta and Facebook because I think the business model is based on theft. I think the business model is based on taking in other people's innovation and adapting that to Facebook. They've not really innovated anything as such. They're laying off 11,000 employees. That's going to have a big impact, a wave impact on the peripheral support services that Facebook employs. Those support services are also going to be impacted. So Facebook is a continuous sell. They're not going to make huge profits. They're going to cut costs, which is good, and that's going to add to their profits. But in terms of actual making profits and the revenue, that's going to go down. So Facebook, Meta is still a complete sell. I see it going all the way down to $70 or lower. There's one viewer said it's going to go all the way down to $50 or lower. Could be the case, but I see it near term going down to $70. Amazon is running at $86. I told you sell Amazon at $140, $150. It's gone all the way down. Netflix also get rid of. Carvana is an interesting one. Carvana was the big online second-hand car seller, and they were worth at one stage $39 billion. On the back of what? Why were they worth $39 billion? But yeah, that's what they were worth last year. They've only dropped 96%. So it's not a big loss. They're down 96%. The value of the company now is something like $1.3 billion from $39 billion, which meant that the markets and the investors and the analysts and the Wall Street banks got it completely wrong on the valuations of all these companies. In fact, a lot of companies, or I would say most companies now that were valued last year at 20-30 billion have lost about between 95 and 98%. I was reading a report that 31 companies that were floated on the Nasdaq from Israel, they've lost between 95 and 98% of the value. So all that money is gone. That's liquidity that you've pulled out of the market. The liquidity is gone. That liquidity is gone. The 39 billion is gone of Carvana. There's no 39 billion. It's only 1.3 billion left. The same as you're investing $100,000 and now you're left with $4,000. You say, well, why don't you go and invest? Because you've only got $4,000 left. That's simply it. Simple. Keep it simple as possible. So I would say keep on selling the market. The market is far too high. There's no liquidity. It's not going to go anywhere, specifically in the near term, and a lot more likely that it's going to go down, especially if inflation goes up. If Joe Biden and the Democrats win, then I think it's personally disaster for the US and disaster for the world, because they need to get rid of that ridiculous government. Okay? Mayor Valensky with Driving Markets. Subscribe, comment, share it. Look on Instagram also. Have a good day.